I mean, there's probably gonna be. I would definitely watch out. If you guys have time today, right, and you can watch the screens and whatnot, I would definitely scout out for a Model 3 here because this looks very, very juicy. I wouldn't try to aim for anything lower than that, right? But this right here is probably going to be a good target later on. So, yeah, pretty good risk to reward. Stop loss will definitely go above this gap here. So I'm not taking this just yet. Need a little bit more than this baby drop down when the market's already like ridiculously bullish, and all we've been doing is leaving behind higher lows. So, like I said, I want to see us ideally smash through midpoint of the down candles here, and then I'll target internal sell stops. Okay. I'm going to use half risk on my main account here. So I was looking to do one. I said maybe two contracts, but with the volatility index, obviously it's going to be one. In this case here, I'll use 6 micros on a potential Model 3, and I'll execute this one on screen for you guys. All right, so I'll short it on reduced risk. Okay, now that we just breached midpoint, stop loss going up there. So pretty good reaction down through midpoint of the down candle. Stop loss remains above the body there of the consecutive down candles. So second play of the day, and we let this pan out now. So partial is just going to be a very modest 1-to-1, and then this here will be 3R. So 1R on the half the portion, and then 2R on the remaining. Okay, stop loss is going to drop a little bit. Okay, ES is yet to tag that low, so I want to see it continue down on this journey to the downside. So once again, half's coming off at 1R. So about 20 handles in profit here. You can very well take off some there. That's definitely a decent payment. Okay, stops is going to be a couple ticks above the inversion gap here now. So risk is very low. The reward's great. All right, so we just tickered into 1R on this trade here, so it's perfect. Stop's going to go down just a little bit more, and it's going to stay there. Okay, so we locked in 1R on a Model 3 here. Now, the tricky part about this transaction here is, yes, I'm paid, right? But I can't aggressively trail stop loss just yet. Now, if we expand through this, let's say through this Fairway gap right here, right? Then I'll start putting stop loss and profit, but I want to see us smash through this first. So essentially, yeah, risk-free. We're already paid 1R, right? And I'll hold this thing. And I understand the higher time frame draw is up here. That's why I used half the risk, regardless of the outcome, right? All right, so we're going to trail stop loss to break even now. So regardless, it's a 1R trade. And now we're at break even, and we'll hold it. That's more like it. Okay, it was almost more, almost that was more like it type of scenario. I'll cut it here. I'm going to cut it here, 25 ticks in profit. So we're going to lock in just a little bit over 1R on a Model 3, so that's good enough. We pay ourselves. So this was the second trade of the day. Okay, so 2 W's on Model 1 through 3. Just a very good scalping opportunity there. Okay, put a thumbs up if you understood the criteria there. As soon as we saw midpoint of the opposing 5-minute down candles break, we shorted. Here, I would take this on reduced risk. It's a beautiful day. Good in and out, no greed. Perfect. So this right here, you can see Model 3s, or not Model 3, obviously Model 2s panning out here, right? I said this would be a reduced risk trade, meaning I wouldn't use a full NASDAQ contract. I would just use half of that, which would be around 6 micros. So why is this Model 2? Okay, it's the last down candles here formed prior to buy side being tagged, right? You have these consecutive down candles drop down, price rises up, reaccumulates more longs at the high, and with the down candles, we do have that fair value gap right here. Okay, so right here you can see Model 2 panning out real time. Okay, and you'd watch it run up above the high. So what you do is you just take a partial above London highs here, and then just hold a runner for Wednesday's high, which I caught out at this point. I think it was like an hour ago. So you take a portion off of your position right above here. What you would do is, of course, have your stop loss at break even, right? And look for this fair value gap to be delivered up into the high. So at that point, that'd be your first portion of the position off, right? Stop loss will go right above into profit. So didn't think we were gonna get a model 1 through 3 today, but obviously it just happened. Everything outside of that was definitely outside of the rules and model. Okay, but this right here was definitely good. I did say it was reduced risk, just simply because we were already just very rich in our premium, right? And just a little bit more risky than say we buy in a discount, obviously by default. So at this point, stop loss would not be around break even. I would just trail it right above or right below the swing low. Okay, and if it stops you out, then you're just fully out and you're paid. That's all, because it's already ridiculously close to the target, right? So it should just smash above there. 80 points with 2 micros. Well, damn, $332 with 2 micros is never nothing to not bat an eye on. So that's good. Good work, Dave. All right, so there we go. We'd be stopped out in profit right there for the remaining portion. So